As markets continue to correct and as fund flows continue to thin out, there is a man who perhaps knows the reasons behind it and also is perhaps putting an action plan together to stem that fall. We've got Jayant Sinha in exclusive conversation with us right here on ET Now. Thanks a lot for being with us. Congratulations on finally moving into your new house. It's a sprawling lawn we're talking in. But I will first begin with Fed because that is what is taking a lot of mind space in India, the markets, investors and all of that. In their statement last night, the US Federal Reserve does say that the US economy is growing moderately strong enough to support an interest rate increase by the end of the year. They haven't really indicated whether it's the end of the year, whether it's September, but at the same time, they have revised the growth for 2015 lower. Data is going to be dependent on labor market. In your assessment, you've tracked this for a very long time now. When do you think the US rate hike will finally happen? Is it September? Is it going to be December? Or could it actually get pushed to early next year?
Good morning, Supriya. And first of all, thank you very much for being here this morning and accommodating my request to do the interview here. You know, the Fed has to do what it has to do. And it's a little bit of a difficult guessing game to figure out whether it's going to be September, whether it's going to be December or 2016. There's a lot of money riding on that decision in the bond markets, obviously, and to an extent in the equity markets. But as far as India is concerned, I think we've got the layers of defense that we need at this stage to be able to deal with the decision whenever it comes. Obviously, we've made sure our fundamentals are strong. Our macroeconomy is very strong right now. Secondly, we've got unprecedented level of foreign exchange reserves. And third, I think just in terms of the policies that we've been following, even sort of on a short-term tactical basis, what we're trying to do with respect to stimulating growth in the economy and so on, has also positioned us well. So I think, let the decision come when it may. The Fed has to do what it has to do, but I think we've put ourselves in a good spot.
So we're in a good spot, and both the IMF and the World Bank have chosen to call us the bright spot and the shining spot and all of that. But in the commentary, the Federal Reserve does say that the policy will be accommodative even post-lift off. So it doesn't seem to be a one-way trajectory. It seems to be a policy-by-policy decision even after the token hike does happen, which many people believe will be done only to assuage markets. How does this really move the needle as far as India is concerned? I get your point, and I appreciate it that we are very well placed than we were, say, a year and a half back when he first murmured the word taper. But how does this really move needle as far as markets in India are concerned?
I think markets in India really have to look at the next phase of the market rally, if you will. And that phase is really going to be driven by earnings and revenue growth in India. And as you know, particularly for Indian companies, the vast majority of them are driven by domestic growth. And that's where I think the building blocks that we put in place, whether it's the public investment, the lower interest rates, and then of course the structural reforms that we're working on, are really going to drive domestic profitability. And so when the earnings cycle takes off, I think in India, that should offset whatever the Fed is going to do. As far as equity investors are concerned, they've known for a long time that Fed is going to raise rates, and obviously that's been factored into their thinking about equity markets. I think it's on the bond and the fixed income side that you have to worry very much about what's going to happen with the yield curve and where the Fed is going to go. And that's where the timing does make a difference. But again, if you look at India's bond markets, they're much smaller.
That's right.
And of course, there are restrictions in terms of particularly what you can do on the short tenor side. And then that's where I think while there might be some, volatility as far as the long end of the yield curve is concerned, the short end I think already has pretty much priced in where the Fed is likely to go.
I appreciate the point that you referred to, which is earnings in India, and I'm going to touch upon that next. But I particularly want to talk to you about the markets. There was a lot of euphoria, and people believe it was irrational euphoria on the Wall Street. And of course, a lot of the confidence was coming from a change in regime here in the center. Of late, there has been a very painful correction in the markets. What do you attribute this weakness to? I know corporate earnings have not picked up at all. They were expected to pick up in this quarter. It's unlikely to happen. I'm going to speak to you about corporate earnings in just a while. But what is causing so much pain in the market? Is the correction in accordance with what you had envisaged? Are people beginning to lose faith in the India story?
You know, Supriya, there's a famous statement about the markets, which is in the short run, they are a voting machine, but in the long run they are a weighing machine. And of course, as far as the Indian markets are concerned, we have a lot of people voting this way or that way.
That's right.
On a short-term basis. You really have to look at the Indian market in terms of three sets of investors, right? There's one set of investors that's very much what are called the noise traders, or the traders that are looking at the market on a very short-term, day-to-day basis. And those flows go in and out, and so we don't have to really get too worried about that noise. Then there's a second set of investors that are more focused on what's happening around the world in terms of asset allocation.
That's right.
And these are large index funds and so on. And then depending on what the long-term view is on rates and growth and so on, can switch money in and out of markets very quickly. And I think there's been quite a bit of that in India, particularly with China obviously having picked up.
That's right.
And India's relative attractiveness having dropped. So we see those flows because of these asset allocation moves that people do. And then there's a third class of investors who are really the long-term investors, whether they are foreign investors or domestic investors. So I think we've had obviously a lot of the people, taking very short-term positions based on what has happened politically. Then we've had, various waves of asset allocation, money moving around.
That's
but
right.
if you really look at the long-term investors, and those are the ones, that's the weighing machine part of the market, which really tells you how companies are doing, how the economy is doing. I think if you speak to them, you'll find, and you see that when you speak to the strategists as well, is that there is in fact a very, very strong view that India is really the emerging market to be in on a 3-5 year view, and everybody is saying that that's where they want to be across emerging markets when they take a slightly longer term view.
So the long-term bet is still on India, is what you're essentially saying here. But I have a question to ask of you. We saw the huge surge in fund flows coming into India. Is that stupendous surge behind us? Because look at China, it's rallying and it's attracting funds as well. We are competing with that market. Will you admit at this stage that the surge of funds that we saw in inflows is perhaps behind us? That's a thing of the past.
No, that's very difficult to say, Supriya, because that depends entirely on relative attractiveness of markets. And the relative attractiveness of markets, depending on a variety of factors, can change. Obviously, right now, China is hot for a variety of reasons. But, a lot of people have argued that the money could flow out of China as quickly as it's gone in.
Yes.
And if that happens, then again, India being attractive from the long term could benefit from those flows. For instance, there's emerging market money that's gone into other markets such as Russia, such as markets in Africa, obviously markets in Southeast Asia. If there are, challenges there or issues there, that money could flow back into India again. So it's very hard to say where that asset allocation money is going to go, on a month-to-month basis. We just have to kind of wait and see how all of that develops.
Because we talk sense and sensibility with you, even as far as markets and macros are concerned, the two things that have spooked markets, at least from a bird's eye view, is the RBI commentary and of course a weak monsoon and coupled with corporate earnings. I'm going to talk to you about the RBI commentary. You are an eternal optimist. Do you believe at some stage, and because data now seems to suggest inflation is still very much under control, even though the monsoon seems to be deficient, do you believe the RBI was over hawkish? Were they far too pessimistic in their commentary at least?
Not at all. I mean, as I've said over and over again, the RBI is a very professional, data-driven organization, and I think what you heard from the RBI was a view that we have to wait for data to come in before they take the next step. That's fundamentally all that they said, and they said that there's data that has to come about the monsoon, there's data that has to come about what's happening with food price inflation, which is notoriously volatile at this time of the year, and there is data that has to come in terms of the economic growth that they can see on the ground. So they're just waiting for the data. I don't think they have either a dovish or a hawkish view. I know Dr. Rajan has said this is for the birds.
That's right.
And even though we're in the garden with birds around us, I'm not sure we need to worry too much about whether they have this type of bird or that type of bird. I think what we have to do, like what we're doing in the Ministry of Finance as well, is really trying to understand what's happening on the ground, what the data is telling us, and then applying judgment thereafter.
But despite the fact, while you do the data analysis, while you do the number crunching, a lot of people believe believe that Governor Rajan, and like he rightly said, I'm not a cheerleader for economy here. I'm going to take a rational view on the data that's coming in. Could he have been a little less negative in his narrative, maybe?
Well, we are the cheerleaders for the economy. Well, that's our job as representatives of the people. Obviously, as you said, I'm an eternal optimist, and I think the economy is going to do well, and I think the data is in fact showing that right now. But again, as I said, the responsibility of an independent central bank is to assess the data and to take the right action, which I think that's what they're doing.
Did they not set the narrative very negatively, though?
Not at all. Again, as I said, the way I interpreted it as well is very clearly that they are waiting for the data. There's a lot of data now coming in. They've got to see that and then take a call.
I'm going to quote Arvind Subramanian, who is in New York, and he says that real interest rates are whoppingly very high and have made it difficult for corporates to deal with the problem of high debt. He is your colleague in the finance ministry. You're the elected representative. Interest rates need to come down, and there is this huge clamor for it. I know it's going to be a data-driven decision. How much do you subscribe to the whoppingly high real
this is where judgment comes into play. I think what the RBI is attempting to do is historically very important, and historically what they're trying to do is to be able to take inflationary expectations out of the economy.
That's right.
We've had 7 years of unprecedented high inflation. Those inflationary expectations are built into the economy in terms of the rates that consumers want for their deposits. It's built into the borrowing costs that companies have and so on. So if you have to take inflation out of the economy, we do have to be able to establish the credibility of the central bank in terms of slaying inflation. Of course, the flip side of that, and which is what Arvind is referring to, is that real interest rates become very high. And then it becomes a judgment call driven by the data as to when the interest rates have to come
Because the
down.
reference also is to greater realization has to be that these are unusual times. And which is why my question is, because these are unusual times, should everybody become a growth warrior at this stage and not be an inflation hawk? You're a growth warrior, I know that. But is RBI perhaps chasing inflation a little too much than it should at this stage?
I think the independence of the central bank in India is extraordinarily important for us for durable, sustainable, long-term growth. And so let the central bank be independent. Obviously, as cheerleaders for the economy, which is what we are,
That's right.
We are going to push for lower interest rates. We are going to want our companies to invest. We want our consumers to shop. So we certainly are cheerleaders. But I think the independence of the central bank is extraordinarily important for us as an economy. Remember, we've got to make sure the currency stays stable, that our capital flows are in balance, that our foreign exchange reserves are built up appropriately. And that's where the independence of the central bank, and I can assure you that investors, when they consider India, we talked about asset allocation and relative attractiveness of markets. The independence of the central bank and the manner in which policy is conducted there is extraordinarily important.
That's right.
For that type of money.
The two big things that are worrying people at this stage: we've perhaps lived the golden period of a crude crash. We've leveraged it very well. Our deficits are under control. But as we move forward, oil is only going to rise from here. Every expert has said that over the period of the next 12 months, we are going to see oil rise. Is perhaps is it easy to say that the easiest part of your job is perhaps behind you? It's going to get tougher now?
I wouldn't say at all
because
that.
You also have a weak monsoon staring at you.
Well, so far monsoon rains have been 13% above normal.
That's
so it's
right.
not very clear how
Which
the
way it's
monsoon is going to pan out. And you have to remember one thing about monsoon. We've got to get away from the headlines a little bit there, and we have to understand it's the timing and the variability, where the rains actually fall, that really drives the monsoon's effect. So that we will only know once the monsoon is over. So let's reserve judgment on that. Let's wait for the data on that, Supriya. But with respect to oil prices, at least everything that I have seen and every conversation I've had with the experts seems to suggest that there is an equilibrium price on oil right now, which is around 70, which is great for us, by the way.
Right.
That's kind of a sweet spot for us with respect to oil, because shale kicks in at 70, 75. So I think if we can stay at 70, India will do extraordinarily well.
I also want to talk to you about corporate earnings that you began the discussion with. they haven't picked up at all, and that's something that's bothering a lot of investors, that while the government is trying to do its bit in trying to start consumption, in trying to start investment, corporate earnings are just not looking up. From a government's point of view, when do you see the turnaround happen? I mean, how many more quarters? Because this does impact your entire investment scenario, this impacts the consumption patterns. When do you see corporate earnings realistically pick up?
Supriya, I lived through the global financial crisis of 2008 as
Yes.
a hedge fund investor.
Yes.
And what you learn after something like that is that at one level we are all macroeconomists. And so to other investors that are in the markets, I would say, think of this situation as a macroeconomist right now, because in the last year we have gone through a consolidation phase. As you were saying earlier, real interest rates have been high. Obviously, there's been tremendous fiscal consolidation for us to get the fiscal deficit under control. Therefore, during this phase, it's entirely to be expected, and that's the macro side of the story. It's entirely to be expected that corporate earnings are going to be weak because we've gone through this consolidation phase. It's now that we have to look forward. And to your point as to when we start to see action showing up on corporate earnings, I think it's at least 6 months. At least
from
6
now.
months. From about now, at least 6 months. And the reason for that is very simple, is because, as I said, there's the cyclical effects of lower interest rates, there's the structural reforms that are kicking in, that we've put in place, FDI and insurance and so on. And then, of course, we have what's happening with the public investment that we put in place. Now, all of this has to filter into orders, higher order books, then it has to filter into actual revenues that get booked, then once revenues get booked, it's profits that's recognized. This whole process of going through and doing all of this takes 6 to 9 months. Before it shows up in EPS. What you would expect to see is about 3 to 4 months from now, you would expect to see the analysts start to upgrade their earnings. Once the earnings revisions begin to happen, that's when the market begins to move again. But that's the normal typical cycle. Now, obviously, there are many risk factors associated with that. But given where we are right now in the sort of economic cycle, that's the way I would expect things to move.
Because a lot of the microeconomy does hinge on that. I have a question to ask of you, and because you're somebody who understands high street finance while you balance it with your constituency, something that we've discussed in the past as well, do you believe at some stage, and one of the things that spooked markets and sentiment hasn't come back from that then is, do you believe at some stage the whole FPI issue, did the government underestimate the potential damage it did to investor sentiment?
I don't think it's done any long-term damage to investors. Of course, I have been speaking to them continuously and explaining to them, how we are following the due process of law, what we've done prospectively, what we've done retrospectively. And again, there are different types of investors, and I think the important investors, whether it's on the asset allocation side or it's on the long-term investing side, totally get the story. Those that trade in and out of markets will obviously play that trigger as they want to play that trigger. But I think people have got the message, they understand what it is, they understand that it's a bit of a risk factor, but it's not a very major risk for most people.
A lot of people we speak to, and I'm going to compliment you here, say that at least you understand what the issue is and you communicate. Do you believe there was a communication error? Your intention was all right, you were just trying to set a court, you were executing a court order, but was communication perhaps not as well as you would have wanted it to be?
Communication can always be improved, and we always strive to do that, Supriya. That's why we are here talking.
Absolutely. So the MSP has been hiked. You have a whole host of brokerage reports that have come out and have said that this is not going to go down very well with investor sentiment because this borders on a populist move. While many of us believe this is politically pragmatic to do, you have an agrarian economy that's going through a crisis. How do you balance out the two arguments? And again, I'm going to ask you to wear your investor cap as well as being a public representative. MSP has been hiked. Is it a decision that borders on populism at some stage?
Not at all. I think we have to take into account the fact that we've had significant rural distress over the last few months, and we want to make sure that people that have suffered because their crops were damaged because of unseasonable weather and so on have a little bit of a cushion here. So I think this is exactly the right call, and I think most investors will also appreciate it because the other side of the story, which everybody talks about as well, is rural consumption going down. So I think this is something that's actually going to boost rural consumption and provide a little bit of a lift to the earnings we were talking about earlier.
I think the reason why a lot of people are losing sleep over in this decision is they believe that The UPA would appease people by doing things like that. The NDA was considered to be different. You were more free market economist. You believed in, rate rationalization. You believed in you believed in free market. And so a lot of people believe today you've done this, tomorrow if crude prices rise, you will roll back diesel deregulation. And which is why the whole populist tone to this entire conversation. How are you going to assuage fears around that? I know you're right when you say this is a small steroid of sorts and this will actually boost rural consumption and in turn help companies that have focused to rural area, but how are you going to balance out this argument?
We'll have to balance it out and see how it plays out. Ultimately, we have to make sure the economy is on a sound footing. Of course, we have a lot of people that are linked to the agrarian economy. We have to make sure that they get the support that they need because, it's not just this sort of cycle in terms of sowing and then reaping and so on. We have to think about what we are doing for the agrarian economy across 3 or 4 different cycles as well.
Right.
And so as we do that, if we impoverish people too much in this cycle, then the next cycle also becomes something that gets impacted by that. So we have to take a slightly longer term view than of course the markets do in some of this.
I'm going to talk to you about banking very quickly because I remember having this chat with you after the budget and you've budgeted for a certain amount. The banks want more recapitalization to happen. There is a view within the government that you will be moving the cabinet on this. Has banking become the biggest sore point for somebody like you who's managing the economy? If banks are not going to lend, projects will completely be stalled, but they want more recapitalization, which in turn does disturb your fiscal math, if I may.
No, we are fully in support of our banks. We are going to give them all the assistance that they need to be vibrant, globally competitive and able to meet the financial inclusion policy goals that we have. So we are fully committed and supportive of our banks. Of course, while everybody talks about recapitalization of the banks, we recognize that our banks need support across multiple dimensions. And so the reform program that we have for the banks includes changes in governance, strengthening their operating performance, helping them resolve their NPAs, and at the same time provide them a strong capital base as well. So the reform program that we have is a comprehensive reform package for our banks, and as I said, we are there to support them fully as they go through these difficult times.
It's often said that the stress in the economy is first reflected on a bank's balance sheets. Rising NPAs is a huge cause of concern. You've been meeting bankers for a while now, pushing them to lend more. I do understand there's a lot of pain in the banking system. When do you expect the credit offtake to happen? Because everybody talks about they haven't been able to transmit rate cuts. You speak to bankers and they say, we're in a pathetic position. We really can't transmit everything that's coming in from RBI.
You see, as you look at what's happening with the banks right now, you'll find, and this is what they'll tell you, is that on the consumer side, the credit offtake has been actually quite robust. And certainly when you see some of the more consumer-oriented banks, you'll see that their loan book is growing quite nicely. HDFC, for instance, is doing quite well and so on. So I think on the consumer side, credit offtake has been quite strong. What we're seeing now as the economy starts to improve is that the working capital financing is also beginning to improve and getting stronger. The third area, which is project financing, is where in fact credit offtake has been actually quite slow, and for appropriate reasons. I mean, the economy is still in a recovery phase, and as it's doing that, capacity utilization is still not as high as we would like it to be, and therefore new greenfield projects really are not yet taking off. So as the cycle moves along, we will see credit offtake getting balanced across all 3 dimensions quite well. But that's really what we're seeing right now.
Mr. Sinha, I have 2 last questions to ask of you, and one of them has to do with the Enforcement Directorate. It's in the eye of a controversy with a certain Mr. Lalit Modi. It's a department that reports into the Finance Ministry. What actions are being taken? I do understand 15 show cause notices have been issued, but at some stage you would want to be more proactive with economic offenders like him, wouldn't you?
No, I think the economic, offences area for us here in the Ministry of Finance is appropriately proactive in these matters. The Honourable Finance Minister has spoken at length about what is happening as far as the Modi case and the Enforcement Directorate is concerned. So let's wait and see how things develop.
You have very recently in the past made a comment on the former Prime Minister Manmohan Singh, and you've perhaps rightly said that to be a mute spectator to corruption also amounts to that. Is there some soul searching to do within the BJP on this matter? Because you are seeing new cases that involve your chief ministers and your cabinet ministers in cahoots with people like Lalit Modi?
Honourable Finance Minister has said very clearly that what the Honourable External Affairs Minister did was with absolutely bona fide intentions. So I actually reject your statement that it has anything to do with corruption.
I have a last question to ask of you. When you took office, and there was plenty of optimism around India, there was plenty of euphoria around India, and for the right reasons, you've said about relative attractiveness of markets. Is it tougher to sell the India story today than it was 4 months back? And there are many reasons for this, whether these are global factors, whether they're domestic factors. There's a certain amount of reality that's finally sinking in also as irrational euphoria wanes off. But is it perhaps today tougher to sell the India story than it was 4 months?
It's actually much easier, Supriya. Anybody who's in the market knows that the time to enter the markets is when the entry price is where it's quite attractive. And I think today, right now, the entry price for India across a range of excellent companies is outstanding, and for the market as well, I think it's very attractively priced right now. So I think anybody that understands anything about how to do well as far as returns are concerned would recognize it's a great opportunity to be in India right now.
There's a reason why I call you the eternal optimist. Thanks very much for talking to us.
Thank you. You're very welcome.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.